Hold on to your hats, folks, because the trade war just took another turn on the dance floor. The latest moves in this high-stakes game have everyone from Wall Street to Main Street buzzing with speculation and concern. President Trump, in a move that surprised absolutely no one familiar with his, shall we say, style, has decided to hit the pause button on his tariff tango. But don't be fooled, this isn't a full stop, more like a dramatic pause in a never-ending performance. Well, sort of. He's offering a 90-day reprieve from higher tariffs for most of the world. This temporary truce is meant to give negotiators a chance to hammer out new trade deals, but the clock is ticking. Most of the world, that is, except for China. The US and China remain locked in a bitter standoff, with neither side willing to back down. The stakes are high and the consequences could be far-reaching. It seems the trade war is alive and well. Markets are jittery, investors are on edge, and the global economy is feeling the strain. The uncertainty is palpable, and it's affecting everything from stock prices to consumer confidence. The tariffs on Chinese goods? Those are still there. In fact, they've been cranked up to a whopping 125%. This is a significant escalation, and it's sending shockwaves through the global supply chain. Trump claims it's all about retaliation, but let's be honest, folks, this has all the subtlety of a toddler with a drum set. The aggressive stance is causing more harm than good, and the ripple effects are being felt far and wide. He's banging on about unfair trade practices, but it's starting to feel like he's just picking a fight because, well, he can. The rhetoric is heated, and the actions are even more so. Now I know what you're thinking. John, this is complicated stuff. And you're right, it is complicated. The intricacies of international trade are not easily understood, and the implications of these tariffs are far-reaching. What does it all mean? Well, for starters, it means higher prices for consumers. Those tariffs are essentially a tax, and that cost is often passed down to you and me. And you're right, it is complicated. But here's the gist. Trump seems to think that slapping tariffs on everything that moves is going to magically bring back manufacturing jobs and make America great again. The reality, however, is much more nuanced. The problem is, it's not that simple. The global economy is interconnected, and these tariffs are disrupting supply chains, increasing costs, and creating uncertainty. It's a complex web, and pulling on one thread can have unintended consequences. But here's the gist. Trump seems to think that slapping tariffs on everything that moves is going to magically bring back manufacturing jobs and make America great again. The problem is, it's not that simple. In fact, it's making things worse. Businesses are facing higher costs, consumers are paying more, and the overall economic outlook is becoming increasingly uncertain. In fact, it's making things worse. The trade war is creating uncertainty in the global economy, and that's never a good thing. This trade war is creating uncertainty in the global economy, and that's never a good thing. Businesses are hesitant to invest, consumers are holding on to their wallets a little tighter, and economic growth is slowing down. Businesses are hesitant to invest, consumers are holding on to their wallets a little tighter, and economic growth is slowing down. The ripple effects are being felt across the board, from small businesses to large corporations. It's like trying to put out a fire with gasoline, except the fire is the economy and the gasoline is, well, tariffs. The more tariffs are imposed, the more the flames of economic uncertainty are fanned. So, as we watch this trade war tango unfold, one thing is clear. The dance is far from over, and the stakes are higher than ever. The stock market, that fickle beast, initially reacted to Trump's tariff timeout with a collective sigh of relief. Stocks surged, with investors feeling a wave of optimism wash over them. The market seemed to be on an upswing, buoyed by the hope that the trade tensions might finally be easing. Gold glittered a bit brighter, as investors sought the safety of precious metals amidst the uncertainty. The allure of gold never fades, especially in times of economic turbulence, and even oil prices got in on the action, with crude oil seeing a notable uptick. The energy sector felt a jolt of positivity, hoping for more stable trade relations. For a brief shining moment, it seemed like the trade war might be winding down. There was a palpable sense of relief in the air, as if the financial world could finally breathe a little easier. But then, reality set in. The initial euphoria began to fade, replaced by a more cautious outlook. The complexities of the global trade landscape started to weigh heavily on investors' minds. U.S. stock futures, those canaries in the economic coal mine, started to dip. The early warning signs were there, hinting at potential trouble ahead. Investors, it turns out, are a savvy bunch. They quickly picked up on the nuances of the situation, understanding that the road ahead was still fraught with challenges. They realized that a 90-day pause doesn't mean the trade war is over, it's merely a temporary reprieve, a brief intermission in a long and grueling saga. It just means it's on hold, like a particularly nasty reality TV show that's going on a commercial break. The drama is far from over, and everyone knows it. And let's not forget the dollar. The currency markets were not immune to the turmoil, with the greenback experiencing its own set of challenges. The mighty greenback took a bit of a tumble in response to all this trade war drama. Currency fluctuations added another layer of complexity to an already volatile situation. A weaker dollar can be good news for exports, making American goods more competitive abroad. But it also makes imports more expensive, which means higher prices for consumers at home. It's a bit of a double-edged sword, really. The benefits of a weaker dollar are offset by the drawbacks, creating a delicate balancing act for the economy. The bottom line is, this trade war is creating a lot of uncertainty and volatility in the markets. Investors are on edge, trying to navigate the choppy waters of global trade. It's like riding a roller coaster in the dark, except the roller coaster is the global economy and we're all strapped in for the ride. The twists and turns are unpredictable, and the end is nowhere in sight. Nouriel Roubini, the economist who's known for being about as cheerful as a funeral director, has a theory about Trump's tariff tango. According to him, the president's moves were not just a matter of policy, but a reaction to external pressures. He reckons that the president was essentially forced to back down, at least partially, because of pressure from the markets. The financial world was in turmoil, and the stock market's volatility was a clear signal. See, when the stock market throws a tantrum, people pay attention. It's not just numbers on a screen, it's a reflection of investor sentiment and economic health. And when those people are big-time investors with deep pockets, well, even someone as seemingly impervious to outside influence as Donald Trump might start to feel the heat. These investors have the power to sway decisions at the highest levels. Roubini's argument is that the markets were essentially holding a gun to Trump's head, metaphorically speaking, of course. The stakes were incredibly high, and the message was clear. They were saying, look, if you keep this trade war going, we're going to pull our money out of the market, and then everyone's going to suffer. The potential for a financial meltdown was looming large. And nobody wants to be responsible for crashing the global economy, not even Donald Trump. The ripple effects would be felt worldwide, affecting not just the wealthy but everyday people too. So, did Trump blink? It's hard to say for sure, but there's no doubt that the markets played a role in his decision. The pressure was immense, and the stakes were sky high. Whether it was the primary factor or just one of many, well, that's a question for the historians to debate. The interplay between politics and economics is complex, and this episode is just one example of that intricate dance. China, being the economic powerhouse that it is, isn't just going to sit back and take Trump's tariffs lying down. They've already retaliated with tariffs of their own, and they're not afraid to escalate things further if they have to. Word on the street is that China's top brass are huddled together right now, coming up with a plan to counter Trump's trade war. They're talking about everything from boosting domestic demand to diversifying their trade partners globally. They're even considering throwing some economic stimulus measures into the mix just to keep things humming along smoothly. The Chinese government is playing this one close to the chest, but one thing's for sure, they're not going to let Trump bully them into submission. This is a game of economic chicken, and both sides are determined to win, even if it means driving the global economy straight into a ditch. So, with all these economic uncertainties, we may be seeing a boost for Bitcoin. You know, investors often turn to alternatives during volatile times. Bitcoin, often dubbed as digital gold, could be one of those safe havens. The dollar seems to be weakening, doesn't it? And in this environment, digital gold or Bitcoin is becoming increasingly attractive. People are looking for ways to preserve their wealth, and Bitcoin might just be the answer. The US-China trade war, well, it's showing no signs of slowing down. Tariffs are being raised and tensions are escalating. This, of course, has significant implications for the global economy. It's a tough situation for businesses and consumers alike. Navigating the global trade landscape has never been more challenging. With all these trade disputes and economic shifts, companies need to be more agile than ever. It's a complex world out there, and staying informed is key to making the right decisions.